Hello everyone, welcome back to my YouTube channel. In the last class, we learned about ABC and traditional method of absorption of overheads, right? Today, we are going to solve one practical problem under ABC as well as under traditional method of absorption of overheads. Clear? So, see here, XYZ Limited manufactures two products, alpha and beta. So, the following data is available for a period. So, these are the production data. Here units produced how much? For alpha 1000 units, for beta 2000 units. And direct materials for alpha 100 per unit and rupees 120 per unit, that is for beta. Right? And next one, direct labor rupees 60 per unit for alpha and rupees 80 per unit for beta. Like that, machine hours per unit 4 and 2 and labor's hours per unit, that is 2 and 4. See here, machine hours per unit means for producing 1 unit alpha requires 4 machine hours but labor hours only 2. For beta, machine hours is 2 and labor hours 4. Means they need more labor hours in the case of beta. Right. Now let's see the details of overhead. Here total overhead cost is rupees 2 lakh. Right. Now we need to split into this rupees 2 lakh into activities. So overhead activity, here it is machine setup 40,000. Here the cost drivers for machine setup, that is number of setups. In the last class, means in my previous class, I explained about cost drivers. Please watch that class first and proceed with this one. And total drivers quality, that is 20 setups, means number of setups means 20 setups. And material handling 30,000, for that cost driver is number of material moves, means 60 moves. And quality inspection, the amount is 50,000. Cost drivers for quality inspection is number of inspections, here 100 inspections. And machine maintenance rupees 80,000, for that cost driver is machine hours, so it is 8,000 hours, means these all are indirect cost. We need to assign out to the or absorb to the products. Clear? Like machine setup, material handling, quality inspection, machine maintenance. Means in ABC and traditional, we will allocate or absorb only indirect cost, means overheads. Means they are not directly traceable in the manufacturing of a product. Clear? Now activity usage by the product. What is the activity usage by product? Means how much of each activity is used by a particular product. Clear? Here number of setups that is used by alpha 8 and beta 12. And material moves alpha 25, beta 35. Inspections alpha 40, beta 60. And machine hours used alpha 4000, beta 4000. Now compute cost per unit using traditional costing. Here base is what? Here base also they have given in the example. Here base is based on machine hours. And compute cost per unit using ABC under activity based costing. Compare and comment. After we need to compare the cost per unit of traditional costing and ABC costing. And we need to comment. Clear? So let's start the problem. First what we have to do, we need to solve under traditional costing. But here the overhead rate means that is based on machine hours. Right? So total machine hours first we need to find out. So total machine hours first we need to find out. See here they have given in the activity usage by product, right? So machine hours used by alpha 4000 and beta 4000, means 4000 plus 4000. Total machine hours 4000, that is for alpha, plus 4000, that is for beta. Totally 8000 hours. Total there is 8000 hours. Clear? Now what is the overhead per machine hour? What is the formula? See here. Total overheads divided by total units of absorption base. Here our base is direct labor based on not labor hours, machine hours. So overhead rate per machine hour formula is total overheads divided by total machine hours. So let's calculate total overheads. How much? Here overhead is rupees 2 lakh. Total overheads rupees divided by machine hours 8000 hours equals to sorry, equals to rupees 25. Rupees 25 per machine hour. That is our overhead rate. This is under traditional costing. Now what we have to do? So next step is overhead absorbed. Overheads absorbed. See here. Then overheads absorbed. What is the formula? Absorption rate, that is 25. Just we have calculated into base used by the product. Base used by the product. What is the base used by the product here? Machine hours. Right. So first we need to calculate the total machine hours. That is for alpha and beta. Clear? See here. These are the machine hours used. 4000 for alpha and 4000 for beta. See here. In the production details, these are the total machine hours usage by the product. But in the production data, they have given machine hours per unit. That is 4. And units produced, how much? 1000. Right? Means for the alpha, total machine hours, rupees 4 machine hour per unit into 1000 unit equals to 4000 hours. And for beta, machine hours per unit is rupees, it is 2 and units 2000 units. So beta 2 per unit into 2000 unit equals to 4000 hours. Clear? I hope this is clear to you all. Now what we have to do? Now we need to calculate the overheads absorbed for alpha. Absorption rate, how much? That is 25 into total machine hours for alpha, 4000 hours equals to, and beta, that is absorption rate 25 and total machine hours 4000 hours. So 25 into 4000, how much? 1 lakh. So rupees 1 lakh. Rupees 1 lakh. Clear? Till here it is clear, right? In traditional costing, what we did? First we need to calculate the absorption rate. Formula is total overheads divided by total machine hours. And after that we need to calculate the overheads absorbed. Formula is absorption rate into total machine hours. Now what we have to do? Now we need to calculate the cost per unit. Cost per unit under traditional method. So first we need to write down direct materials and direct labor. Here direct materials means we should not apportion direct materials because they are directly traceable in the manufacturing of a product, right? So always in a traditional and in ABC costing, we will apportion only indirect cost, means that are not traceable to in the manufacturing of the product. So direct materials we need to write down directly. Clear? So direct materials is, see here, rupees 100 per unit and units produced how much? 1000 units, right? So 100 into 1000, how much? That is 100 into 1000, 1 lakh, right? So 1 lakh. And for beta, direct materials, that is rupees 120 per unit into 2000 units. So rupees 120 per unit into 2000 units. How much? 120 into 2000, that is equals to rupees 2,40,000. 2,40,000. Clear? Now direct labor. In the same way we need to calculate. Direct labor is rupees 60 per unit and units produced for alpha 1000 units. So rupees 60 per unit into 1000, that is 60,000. Now for beta, direct labor rupees 80 per unit and units produced 2000 units. 80 into 2000, that is equals to rupees 1,60,000. 1,60,000. Now overheads absorbed, how much? Just now we have calculated, right? See here, overheads absorbed for alpha 1 lakh, for beta 1 lakh. So write down 1 lakh, 1 lakh. Now total cost, how much? 1 lakh plus 60,000 plus 1 lakh, that is equals to rupees 2 lakh 60,000. Now 2 lakh 40,000 plus 1 lakh 60,000 plus 1 lakh equals to rupees 5 lakh. Now what we have to do, we need to, here units produced, write down units produced, how much? For alpha 1000 units and for beta 2000 units. Now cost per unit means 2,60,000 divided by 1000. 2,60,000 divided by 1000. How much? Rupees 260 per unit. Now 5 lakh divided by 2000. Rupees 250 per unit. Clear? So this is, in this way we need to calculate under traditional method. First we need to calculate the absorption rate and overhead absorbed. After that we need to calculate the cost per unit. Direct materials we need to assign directly, and overhead, that is we need to absorb. That one we need to write down, and after that we need to calculate the cost per unit. Clear? Now I hope this method is clear to you all. Now we will go to step second, that is ABC costing. Under ABC costing, how we will solve? First what we have to do? First we need to calculate the cost drivers rate. For that we need to write down the activities, means these all are indirect costs. Machine setup, material handling, quality inspection and machine maintenance, and the amount. See here, amount that is given here. 1 minute. Yes, he's here. 40, 30,000, 50,000 and 80,000. And setup rates, that is number of setups 20 setups, 60 moves, 100 inspections and 8,000 hours. So write down as it is. See here, 40, 30, 50, 80. Right. Now total drivers quantity, 20 setups, 60 moves, 100 inspections for quality inspection and 8,000 machine hours for machine maintenance. Now cost driver set, how we need to calculate? 40,000 divided by 20 setups means 2,000, rupees 2,000 per setup, rupees 2,000 per setup. See, you write down here, this is A and this is B. Here answer is A divided by B. Clear? Now 30,000 divided by 60 equals to rupees 500 per move. Rupees 500 per move. Now 50,000 divided by 100. 500 per inspection. Rupees 500 per inspection, and 80,000 divided by 8,000. That is rupees 10. Rupees 10 what? Per machine hour. Right. This is, now we have calculated the cost drivers rate. Now what we have to do? Now we need to allocate the overheads by ABC. First, same we need to write down direct materials. Here activity rate, activity usage, alpha, amount, beta, activity usage and amount. Like this you write down. And direct materials, directly you need to enter the amount here. So direct materials, how much? Here we have calculated, right, under traditional method, that is rupees 1 lakh. Direct materials, see here, I will write down here under alpha 1 lakh, under beta 2 lakh 40,000, and direct labor also 60,000, 1 lakh 60,000. Clear? Now overheads. Now see here, setup, material moves, inspection and machine maintenance. Now activity rate, write down the activity rate for setup, material moves and inspection and machine maintenance. How much? Just now we have calculated, right? That is 2,500, 510, right? So write down here activity, right? Like traditional costing, there we will use absorption rate, right, into the base. Means here in this our problem the base is machine hours. Like that here we need to write down the absorption rate or activity rate, that is 2,500, 2,000 per setup, 500 per move, 500 per inspection and 10 per machine hour. So write down here rupees. Now alpha, under alpha. What we have to write down here? Activity usage. How much the activity usage means how much of each activity is used by a particular product. Clear? So here activity usage is, see here, activity usage by product alpha 8, 25 inspections 40, machine hours used 4000. So write down 8, 25, 40, 4000. And for beta 12, 35, 60 and 4000. Clear? These are the activity usage. Now you need to calculate. Like traditional method also, here we need to multiply. 2000 into 8 equals to 16,000. 500 into 25, 12,500. 500 into 40, 20,000. 10 into 4,000, 40,000. Right? Now for beta. 12 into 2000, 24,000. 35 into 500, 17,500. 60 into 500, 30,000. And 4,000 into 10, 40,000. Now we need to calculate the total overheads for alpha and beta. Not total overhead, sorry, total cost. Total cost. Clear? So here 1 lakh plus 60,000 plus 16,000 plus 12,500, 20,000, 40,000. That is equals to rupees 2,48,500. Now for beta, 2,40,000 plus 1,60,000, 24,000, 17,500, 30,000 and 40,000 equals to 5,11,500. Now we need to calculate the cost per unit. So total cost for alpha 2,48,500 and for beta it is 5,11,500. So cost per unit for alpha, it is equals to total cost 2,48,500 and units produced. How much? That is 1,000 for alpha and 2,000 for beta, right? So 1 minute. Yes, 1,000 equals to 2 rupees 248.5. Now for beta total cost is 5,11,500. See here, 5,11,500 divided by units produced 2,000. 5,11,500 divided by 1,500 divided by 2,000 equals to 255.75 rupees 255.75. Clear? So this is the cost per unit under ABC costing. Now what they said, see here in the problem, they said compute cost per unit using traditional method, that is over, and compute cost per unit using ABC, that is also over, and after that compare and comment. Now we need to compare. So for that what we have to do, so this is the table. See, product alpha cost per unit under traditional method rupees 260 and under ABC cost per unit it is 248.50, right? 248.50. Now what is the difference here? Here traditional that costing, that is overstated by rupees 11.50, right? And in beta traditional cost per unit, that is rupees 250, under ABC cost per unit is 255.75. Now the difference means here the traditional costing, that is understated by rupees 5.75, right? Now this traditional costing, it overstates the cost of alpha, overstates the cost of alpha. So the ABC method, it gives a more accurate and fair collection that is based on actual resource usage, right? ABC method, it gives a more accurate and fair collection that is based on what? Based on actual resources, actual resource usage, right? So here we have finished our problem. We have computed cost per unit under traditional method and under ABC costing. Here traditional method, that is useful when the company is producing similar products like same size, like that, like clear. But ABC costing, this is used by the organization where they produce more products because it will give accurate results. Clear? So this ABC method, it gives a more accurate and fair collection that is based on what? But that is based on actual resource usage. Clear? So I hope this problem is clear to you all. If not, please leave a comment. Thank you.